following program is classified G. It's suitable for all ages.
Tonight, we give a breakdown of the laws on taxation within Sri Lanka. The constituents of tax law has been up for debate on many occasions, with a lack of clarity and general understanding being a main cause. What are the key provisions for tax law in our country and how has it changed over the years? Should we be looking at novel methods of more effective taxation? What are the penalties for tax evasion and how can evasion be controlled? Good evening and welcome to Law, Land and Liberty. We are keeping with the promise of bringing in a contemporary legal topic and breaking it down for our viewers. Now, I'm certain most of our viewers will find today's topic a bit interesting, something that has been within discussion forums for quite some time about tax and how the law is structured around the taxation policies of a government. A lot of insights that we need, and we have with us an individual who is an expert in this field, who has been even within the reformation aspects of this and has been going to courts pertaining to matters that have been primarily with regards to taxation and banking. Mr. Attorney-At-Law Naomal Goonewardena, thank you so much, sir, for joining us today.
Thank you.
Mr. Naomal Goonewardena is a president partner and founding member of Nitya Partners. He has over 30 years of experience in the field. A lot of interesting things we have to discuss with Ms. Naomal today. Before we move into the discussion, as usual, what we do is we give a breakdown of our entire program so that the viewers have a basic understanding of how we will conduct this discussion. Firstly, we will start with the most central piece of legislation to this, the Inland Revenue Act number 24 of 2017. Then we will move in to understanding the laws on income tax, personal income tax, and give a breakdown of what the asset classifications are and a lot of content to cover there. Then on capital gains tax and the VAT, which has been a point of contention over the past few years. And finally on court proceedings and the appeal process.
Hello, my name is Mahieash and I am a law student of Sri Lanka Law College. My question is about the Inland Revenue Act. What are the salient features of the Inland Revenue Act?
All right, let's get into the discussion then directly, Ms. Naomal. Thank you once again for joining us. The Inland Revenue Act, as we began this discussion, the most central piece is our understanding when in general we say the Inland Revenue Department and we understand that's where the tax collection occurs. The basic outline of a layman of the taxation process would be that. How do you, in fact, enter the topic of the law of taxation? Mr. Naomal, I want to keep it general so that you can give us an introduction, because my key question firstly was going to be on the types of taxation that is recognized in our law, and we can build on that. How do you enter this topic?
Yes, so I think, Dhanindu, first of all, thank you for accommodating me on this show. I think taxes are generally broken down into two basic types. One are direct taxes, which are taxes which are paid by a particular person, and the brunt of that tax is also borne by the same person. Right. So the example for that is income tax. As opposed to that, we have other taxes which are called indirect taxes, where the tax is paid by a particular person, but it is meant to be borne by another person. Right. The example of that is VAT, and that is very significant, because indirect taxes eventually are supposed to be borne by the consumer. So if there is an increase in the rate of VAT, the people who are directly affected are consumers, right, because it's meant to be borne by them. Whereas if there is an increase in the rate of direct taxes, like income tax, it is meant to be borne by the person who is paying the tax. Right. So that's the basic distinction which we have between taxes in general. And so it is in that context that income tax, for example, is covered up by the Inland Revenue Act, VAT is covered up by the VAT Act, and now we have this Social Security Contribution Levy which is proposed, right, which will be covered up by a separate act or by the Finance Act. Right. So that's the basic distinction.
So if you could, if we dive deeper into that about like, now my second segment was going to be on the laws on personal income tax, and we can like flesh out that area there. The act, when you browse through it, you find there's a lot of priority given to things like the classification of assets. So what can be defined as something that will be taxed or not. I think that moves towards the more capital gains aspect of this. You can explain it as you wish. If you could give us the key concepts that we need to be aware of when an individual is being taxed. What are the salient features there? What is looked at when you consider taxable income? What are those key features?
Right. So I think the key features are that the assessable income of a person could come from one of four sources. Right. The first is employment income. And if you have employment income, one of the key features of employment income is that eventually you are taxed on the profit from employment. Okay. But in determining the profit, there are very little deductions which are permitted when your source of income is employment. Okay. The second source is business. So if you have profits from business, then in such a case, there is a much wider category of expenses which can be deducted in determining what is called your profit from business. Okay. The third category is investment. So investment covers interest, dividends, rents, royalties and all that. Once again, it's a profit from investment, so which is calculated, and then it's the profit on which you are liable to tax. Okay. In that respect, there's one big difference between the old Indian Revenue Act, which was 10 of 2006, in that under the old Act, for example, if you had interest income, then there was nothing which was permitted as a deduction. Okay. But under the new Act, when you have investment income, of which interest could be a part, certain deductions are permissible. Okay. And then there is this catch-all clause, which is called profits from other sources. Once again, it's a profit which is computed. And I think that's one thing which is of importance. It's the profit which is computed on which tax is payable. It is not on the total amount which you receive. Right. I think people misunderstand that if you get some amount, that it's on the total that you pay tax. Right.
So if we take into consideration something like, now for employment, this is just a subordinate question I want to ask you, the deductions from the EPF or the ETF. Does after that deduction, is that the value considered to be the profit in this case for employment income?
Yes. How is that accounted? At the moment, by virtue of Act number 10 of 2021, there was a series of other deductions which are permitted up to a maximum of 1,200,000 per annum, right, which included insurance premiums, investment on the stock market, okay, and things like that. Right. So if you have employment income, then you could possibly have deductions on account of that, which also includes interest, right, which may be payable on, let's say, some activity. You may have certain deductions which are interest on housing. You may have certain deductions up to a maximum of 1,200,000.
Okay, right. So moving forward from there, since this is the first segment, I want to get a take on, now there are authorities that are in charge. Considering if we are to give a very primary breakdown of what are the key authorities, as in I believe there's a commissioner or a director general in charge of this when it comes to the collection of taxes that is within the Inland Revenue Department. What are the key authorities that are in charge? And I think we can explain further within our last segment on how the appeal process should work for those people. Which authorities in general are in charge of this specific activity?
Yes, so generally income tax, the entirety of income tax is collected by the Inland Revenue Department. Right. So the Inland Revenue Department is comprised of the Commissioner General of Inland Revenue, and then there are senior deputy Commissioner Generals, and there is a structure there. Yeah. But beyond that, there is also value-added tax, where there is value-added tax which is collected at import point. Right. So even though it is the Commissioner General of Inland Revenue who is overall a charge of the VAT Act, yet a substantial amount of VAT is collected at import point through the customs mechanism. So those are the two main authorities. And then there is also certain provincial statutes which also impose certain taxes, like stamp duties, for example. Okay. Okay. So at that level as well, there may be some taxes which are collected, which are mostly on, very specially on things like stamp duty and various local authority related activity.
Okay. I have a number of questions in terms of policy for a tax regime, but before we go into that, if you could give us a bit of a breakdown on how excise duty and things like taxation on some would consider demerit goods would be considered, or in terms of alcohol, or in terms of that, how does that categorization happen? That is also considered that can't be considered as VAT, I believe. How does that categorization occur?
Yes, so that has been subject to tax in different ways at different times. So earlier there was there's something called the Excise Special Provisions Act, which imposed certain additional taxes in addition to the normal taxes which are imposed. So for example, there would have been the normal value-added tax, right, and earlier there was something called nation building tax, which is no longer applicable.
Right.
But in addition to that, under the Excise Special Provisions Act, there was excise additional duties which were levied on excisable articles. Then at various times they have talked about consolidating all these taxes and imposing one tax, very especially on alcohol and tobacco. So that also was a proposal, but I don't think that proposal eventually was implemented. So it is in that sort of context that those are taxed, but obviously those are taxed at higher rates, and actually alcohol and tobacco income tax rates on those companies is also at an enhanced rate of 40%, whereas the general rate was at that point of time 24%.
In terms of giving a small conclusion to our first segment, sir, what are the key areas that you believe we need to iron out, or that people aren't clear because you are in the field and you have had to face this for quite a period of time? Where are the blurred lines when it comes to the issue of specifically to the Inland Revenue Act? What are the key areas that we need to really make people understand, and we can discuss those elements in the future as well?
Yes, I think people should be made to understand that within the Inland Revenue Act as well, you don't become taxable at point zero. There are things called personal reliefs. Currently, personal relief of 3 million rupees, which is up to 250,000 rupees a month, would be covered up by the personal relief. So up to 250,000 you could go, and I'm talking about profit by and large. So you could have a profit from a small business, for example, up to 250,000 rupees, and still you won't be liable to any income tax. That limit is going to be brought down to 1.8 million from the 1st of April 2023. That's the proposal, which means 150,000. Right. So once again, people need to understand that you may have some income. You don't need to be scared about it as long as you're keeping below those limits on a yearly basis. And also for a small and medium enterprise, for example, it's the profit. So therefore, you are entitled to various deductions ranging from, maybe you may have payments which you have to make to third parties. You have travel expenses and all that. Those are all permissible as deductions. And it's only after that, it's on the profit that you are liable to be taxed.
Right. I think that gives us good clarity on where this discussion could move forward to. Also, we'll take a very short break. You are watching Law, Line and Liberty. Stay with us.
My name is and I'm a Mechatronics Treasurer. My question is about income tax. What are the key laws that govern income tax within Sri Lanka?
Welcome back to Law, Land and Liberty. We are in conversation with Attorney-At-Law Naomal Goonewardena, and we are in the topic of the laws on taxation within our country. Sir, the first segment really gave us a lot of clarity on where we can take this discussion forward, and now I believe what affects most people in the country would be personal income tax, and the questions also would arise there. Before we move into, as we move into that, I think this will also be pertinent there, the documentation aspect. Now, when you refer to most of how tax regimes function, we see that direct taxes aren't fully acquired maybe by the state. There is more potential, and that issue we'll discuss in the future. But is it because there is too much of a stringent procedure, as in terms of documentation? Who should open a tax file? How does that occur? If you could give us a brief breakdown.
Yes, so I think the main formality which is required eventually is that a person would be required, if he has taxable income, he would be required to file an income tax return.
Right.
Now, that income tax return is not a simple document in order to fill up and send. So therefore, that itself may be a deterrent to somebody actually coming into the tax net, because he wouldn't want to get involved in that process. But beyond that, I think if you are something like a small and medium enterprise, there is a record keeping aspect which is important.
Yeah.
So even if you are a lawyer or maybe a doctor, you need to keep a record of all your income.
Right.
And you need to keep a record of all your expenses.
That is required, or it's a ethical sort of duty that you have?
No, it is required.
Right.
Right. So, for example, if you have something like a turnover of more than 5 million rupees, you are required to keep those records,
right.
and you would need to produce it at the relevant time.
Right.
So that discipline is also required if you want to actually fall into the tax net and to be actually paying your taxes
Okay.
in the proper manner, because at some point of time those records will be called for.
Okay.
So I suppose that also acts as a deterrent to some extent,
Yeah.
for people paying taxes.
Right. Right. So this is one area where I wanted to bring back the issue of sources again, because in cases of money laundering, or if you can't, I think that's where you will get into also, where if you can't trace back where the money really initiated, or if you can't present that to the government, and that is either you move to this tax evasion sort of the criminal, the crime in that instance. How does all that tie up to your personal income tax? Now, my question is going to be, where does the government get to draw the line? Should you be able to account for every rupee that you earn? Or is there, if that's the case, I think it makes sense, but or is there another sort of like format, like, this amount or this at least 80% to 90% of whatever you earn, you should be able to account for? How does that work? The accountability aspect to like a
yes,
person.
so I think there are some balances here,
Yeah.
which would apply. So I think, for example, if you look at a business,
Right.
and there is a provincial revenue, maybe an assessor,
Right.
going into, let's say, a row of shops,
Yeah.
then he would make an assessment that these shops make a margin of X%
Okay.
on their sales.
Right.
And then he would make an estimate of, let's say, this would possibly be the turnover of this particular shop.
Okay.
And then around those figures, I presume that if their income tax return is submitted, they will accept it.
Right.
Right.
Okay, I think that makes sense. So if you could, since I just mentioned about there are certain crimes that are involved in this as well in terms of tax evasion, what are the penalties that are represented either in the law, or the penalties that are recognized? We'll talk about court procedure in a while, but what are the key penalties that are recognized here?
Yeah, so I think one of the things about tax is that most of it is a collection process, which the government is interested in, not so much penalizing.
Right.
So therefore, there is.
No, my point is, like, if they are not meeting with the regulations that are required,
yes,
what sort of action will be taken?
So for example, the main penalties actually come from non-filing of income tax returns.
Right.
So that is the main penalty for income tax or any other tax where you have not filed your return.
Mm-hmm.
Then there will be a penal section.
Based on the amount, is that so?
No,
is that
based for just not filing the return.
Right.
Then thereafter, the other procedures are to collect tax,
Right.
which is what is called the recovery of tax.
Okay.
At that stage, they are they are interested in the tax,
Okay.
and then there might be a penalty imposed on the tax.
Okay.
Right. So for income tax, it can maybe go up to 50% or 100%, right? And the same for VAT.
Okay.
So there is a penal element there, but that is all to do with the payment of the money. It's not really about imprisonment or anything like that.
Right.
In very exceptional situations, which the Indian Revenue actually doesn't do, you might actually be charged for an offense for filing maybe an incorrect income tax return or something like that.
Right.
But that is very exceptional, because the Indian Revenue is more interested in the collection of the
tax.
monies,
Right.
rather than punishing a person for.
Sure. So if, since we are in the topic of collection, I'm not sure if you're deviating from our topic with this question. If so, just let me know. So, but I want to clarify, if in unforeseeable circumstances like the COVID-19 crisis, where there was a stronghold on the finances of the smallest to everybody, are there provisions within the Act that looks into that? Specifically when it comes to personal income tax, or is that an area that the government has to make sort of arbitrary or spontaneous decisions on? How does that work?
Yes, so I think the new Inland Revenue Act does not give much flexibility with respect to dealing with those situations.
Okay.
Under the prior Inland Revenue Act, what happened was they might impose a penalty of 10% or something like that and waive off the rest of the penalties.
Okay.
But under the new Inland Revenue Act, that sort of flexibility is minimized. Okay. So I concede that there could be possibly difficulties in making payment, and strictly in terms of the statute, the Inland Revenue officials also may not have that much of flexibility to deal with maybe things like late payments.
Right. So I think that will fall to the government who is making the policies to decide on those regards. So if I could ask this question as well on what are the key areas where you are not taxed, as in the non-taxable sort of income. I think if we can get a clarification on that, it will work well on what we talk about VAT and capital gains tax later on. What are those commodities? Where does that fall?
Yeah, so from the point of view of income tax, there is very little which is not taxed, but one important thing which is not taxed is foreign source revenue.
Okay.
So by and large, exports are not taxed. If you are providing a service to a non-resident person for which you are getting paid in foreign currency, you are not taxed.
All right.
So that is one important category. So if you are an SME and, for example, you are an exporter, in all probability, a large part of what you would get may not be liable to be taxed.
Okay.
And also you need to know that you are taxed on income. Okay. So for example, if you get a gift from somebody, that by and large may not be subject to tax. So I think one of the questions which is often asked is, I want to give some fixed deposit which I have to my children. Yeah. Will they be taxed? Yeah. No, that's not taxed. That's a gift. Yeah. That's not income for your children. Right? So therefore they won't be taxed on that.
Right. So even things like inheritance, because you see this on when you go to banks, you are supposed to give the source of where if you're making some form of exchange. Things like inheritance, things like gift, in no occasion will be taxed. Is that the understanding, or how?
Yes, so inheritance itself is not taxed.
Right.
It's just that when you inherit something and eventually if you sell it off, the cost of that item would be taken back to the time at which the person who gave it to you actually purchased it.
Okay. Well, if you could explain.
Yeah, so for example, your mother had bought a property in 1982, and through inheritance you have got it in 2022. Right. And in 2025 you sell it off. Right. Then in order to determine, for example, what is called investment gains or capital gains as we normally call it, it would be the difference between the selling price in 2025 and your mother's purchase price in 1982.
Is there an account for things like inflation, or is
no? There is no adjustment for inflation, right? So those are the
that is something that we need
difficulties. Yes.
I think that really paves our way into our next segment on where we want to discuss a bit about the capital gains aspect and the VAT, which is the contentious part of all of this. We'll take a very short break. You're watching Law, Land and Liberty. Stay with us.
Hello, my name is Kai and I'm an undergraduate at NSB Green University. My question is about alternate taxation. How are capital gains taxed in our country and what are the provisions for that?
Welcome back to Law, Land and Liberty. We are in conversation with Attorney-At-Law Naomal Goonewardena. So this segment we wanted to separate a bit on capital gains tax and the VAT in general. Now I know these are two very different things, but things that are contentious and things that people really need an understanding of. If you could start by mentioning what capital gains tax is and this concept of realization, which I think we could visit for quite some time. How is a commodity that is going to be taxed recognized? What is the process there?
Right. So capital gains actually arises from what is called capital assets.
Right.
And remember, if it is a capital asset of your business, for example, let's say you are running a business and you have office premises. Now, if you sell the office premises, that's not a capital gain for income tax. That's business income.
Okay.
But if you sell your personal house, for example, then in such a case, it will result in a capital gain, or what we call investment gains.
Right.
Now, investment gains is actually the difference between selling price and purchase price.
Okay.
Right. So, if by some chance you have purchased something at 100 rupees and then sold it for 200 rupees, and we are talking about capital assets, right? Yeah. So, for example, it's like land and buildings, maybe not motor vehicles, because motor vehicles are not in most cases capital assets for people.
Right.
So it's when assets like that are, let's say shares which are not listed on the Colombo Stock Exchange or something like that, then the difference is referred to as a capital gain or investment gain, and it is subject to tax at a rate of 10%. Okay. 10% on the difference. There is one important exception to that, that is, if the asset has been bought before the 30th of September 2017, then in such a case, the cost of that asset would be considered to be the market price as at that date.
Right.
So I stand to correction on what I said earlier. If, for example, your mother had given it to you in 1982, the cost would be considered to be the market value as at 30th September 2017.
Right. Okay.
And I think in that context, one thing is that as at 30th September 2017, most prices of land and buildings was at a relatively high amount in relation to what it is now.
Yeah.
So therefore, it's unlikely that you will have a big capital gain if you sell off one of those assets now, because the appreciation may not have been that much.
Right. Right.
So that's also, I think, important. But you need to know that that is applicable in respect of capital assets, mostly personal assets.
Right.
But if you sell an asset in a business, for example, in most cases it will become business income, which means you are liable to tax at the full rate on the difference between selling price and buying price, which buying price may even have been in 1950.
Right, that makes sense. Anything else with regards to how assets are identified when it comes to capital gains? I think you mentioned about motor vehicles not being part of this entire process. Is it because capital gains tax would rely mostly on immovable commodities, or how does the identification?
So by and large, it is on immovable items and also shares.
Okay.
So the emphasis is on those types of items.
Right. Where if there is a reformation process that is required for capital gains per se, this question comes from I think as we look into the topic of taxation, in a number of occasions you see that the entire potential of taxation doesn't really happen in a country. We are far behind what could be the total quantity of taxable income or what can be taxed, primarily because that will be resulting in like sort of the money that the government or the state will be able to work with. In the issue of capital gains tax, where are the reformations that you think would be required in terms of making the net larger or making sure that nothing falls through the cracks in these instances?
Yeah, so we have had capital gains tax rates which are much higher than 10%.
Right.
But we had something called indexation. That is, it depended on the period of ownership.
Okay.
So if it was, for example, under 2 years, it was taxed as high rates as 25%.
Okay.
So one of the things is maybe some indexation process also may help. In the sense, if you have held it for 10-15 years, maybe 10% may be appropriate. But if you held it for shorter periods of time, then maybe it might not be appropriate.
Right.
Second thing is that there are times at which asset values obviously increase substantially.
Yeah.
Now
Specifically,
currently,
land is one of those.
that's right. So it is very especially in inflationary times, generally it is expected that land and shares could do well,
Okay.
right? So in that context, if the government identifies that these are potential assets
Yeah.
on which prices could increase substantially, which includes shares listed on the Colombo Stock Exchange, then in such a case, I think that those are areas which can possibly be the subject matter of tax
Right.
in a manner which would get some meaningful amount of income.
Okay. Okay. I think that makes sense. So if you can move into value-added tax now, I think something that we missed out on previously was what the payee tax is and how that really comes into direct taxes. But we'll visit that also if possible. What are the key features when it comes to value-added tax? Because from the general understanding is also it falls to the consumer. So the retailer would amount that the quantity or the addition and then transfer that directly to the consumer in terms of value addition. Firstly, let's talk about which commodities are most immediately affected by value-added tax, because it is one of the key discussion forums. As when a government comes into power, I think the percentages are something that's been discussed. So what are the key commodities that will be affected by that, and then we'll move on.
Yeah, so actually value-added tax is actually more than 75% of government revenue,
Right.
or tax revenue is collected through value-added tax.
Okay.
And when value-added tax is increased, I think the figures speak for themselves. When the changes in revenue proposals were announced about 3 months ago, they spoke of an increase in value-added tax from 8% to 12%, which was supposed to get in an additional annual income revenue to the government of 158 billion rupees.
Okay.
Right. Then the reduction in the value-added tax threshold at which value-added tax had to be paid, being brought down from 300 million to 120 million, was supposed to bring in an additional 15 billion rupees. So in total, 175 billion coming from value-added tax changes, moving it from 8 to 12. Now, I think the recent mini budget is talking about increasing it from 12 to 15.
Right.
So that means even more revenue. As opposed to that, the increase in corporate tax from 24 to 30 was going to bring in an additional 70 billion rupees.
Okay.
The increase in personal tax and the reintroduction of payee, the individual tax rates were going up from 18 to 32.
Okay.
And the introduction of payee was going to bring them only 20 billion rupees.
Okay.
So you can understand that individuals itself are not contributing a large part of the tax revenues. It is eventually VAT. And in today's context, when imports are restricted further, eventually it's only essential goods which are coming through,
Yeah.
whether domestically produced or imported. And eventually, the tax on that is what is going to be borne by consumers,
Right.
the public at large, which is going to support this 175 billion additional tax revenue which is being spoken of.
Right. So again, a number of questions that would that comes to my head on what do you think about that model moving forward? Our emphasis on the VAT, is this how organically the country came to a point where mentioning, okay, look, this is where we can focus on to run the government or to run the state in terms of taxation, or should we really reform that process to some extent?
Yeah, so I think everybody is talking about reform. Everybody is talking about how we need to move out, the percentages need to change, how the reliance on VAT should come down and direct taxes should increase.
Yeah.
But eventually, for there to be direct taxes, there should be sufficient profits in the system.
Yeah.
Profitability needs to be high.
Yeah.
Right? So for example, if you look at these programs you get on entrepreneurship overseas, right? You get those examples where the cost of a product is $2 and they're selling it for $30. That's what we need in this country, profit.
Yeah.
Now, if profit is going to be a dirty word, right, then in such a case, right, so that there is profit, there is taxed,
Right.
the government gets its share of revenue. That's what we need in this country. So unless there is profit,
Yeah.
from entrepreneurship, very especially, and also the formal sectors like banking and all that, eventually income tax is not going up.
Yeah, yeah.
Right? And the fact is that I don't think the individuals who are so-called wealthy cannot support a much higher amount of tax revenue being generated.
Right. So I think that's a fundamental misunderstanding of how the taxation occurs. In the way you explained it, I think really gives us some clarity on that. So moving forward, if things like VAT, does something like VAT affect the production process then? Like this, I think we are deviating a bit from the legal aspect of this, but I want to tap into your personal expertise on this as well. What can really enhance the production process within a country? What sort of taxes needs to be controlled? Because we see with the growth of only essentials being imported, we would see certain policies being brought in, as in tariffs in general brought in for non-essential goods, or complete ban on them. Does that sort of support the entire local production aspect within our country?
Yes, so actually value-added tax is a very principal tax,
yeah.
Namely that it does not depend on the amount of like sub areas through which that production process has gone through.
Right.
So therefore that helps things like subcontracting and all that, which is also essential in this country.
Right.
Right. It doesn't mean that if you are manufacturing something, every single thing needs to be done within in-house.
Yeah.
Right. Whereas value-added tax ensures that there is no thing called tax on tax.
Okay.
Now the social security contribution levy and all that all would result in tax on tax.
Right.
The earlier nation building tax also resulted in tax on tax.
Right.
Whereas value-added tax, because of the principles on which it works, right? So the structure of that tax is sound.
Okay.
And also assists things like subcontracting and getting other smaller players also involved
right.
in your production process. So I think to that extent the tax is correct.
Okay.
But also there are some misunderstandings, I think, which should be clearly kept in mind. For example, I think currently there is a proposal that from the 1st of October that there is going to be a reintroduction of VAT on condominiums.
Right.
So that VAT rate is now being spoken of at 12% or 15%,
right.
which was earlier 0.
Okay.
Now, does it actually mean that the price of a condominium would go up by 15%?
Right.
The answer to that is no.
Okay.
Because value-added tax means that from the 1st of October, if something is liable to VAT or condominium sale is liable to VAT, there will be 15% theoretically which is collected from the customer.
Okay.
But however, just as the condominium developer becomes liable to VAT,
right.
he is also entitled to deduct all the what is called input credits of VAT,
okay.
which his suppliers have charged on him.
Okay. Okay.
Right. So therefore, what he was currently not entitled to deduct
right.
against his tax, now he is entitled to deduct.
Okay.
So because of that, his cost comes down, because up to now, because he was not liable to VAT, that becomes part of his cost.
Okay.
So when the subcontractor or the contractor came and did your building, he would have charged you VAT.
Right.
That was part of your cost.
Right.
Now here going forward, that won't be part of your cost, because you can deduct that
Okay.
against the VAT which your consumer is paying for the apartment building.
Right. Right.
So because of that, the prices should not go up by 15%.
Right. If at all, it will be a small amount.
It will be maybe 5 or 10 or something like that.
Right. Right.
So because people don't fully understand that, I think various parties are also able to exploit that, that lack of knowledge to say, okay, everything will go up by 15% or something
right.
like that.
I think that's a very important point. So my next question is going to be on, like, our next segment we are going to dedicate to court proceedings and how this can be questioned. I will take this question up again as we begin our next segment on, you know, where can we try this, where can we bring this to some form of justification if there's some predatory sort of expansion of prices like what you just mentioned. We'll take a very short break. You're watching Law, Line and Liberty. Stay with us.
Hello, my name is Imit Rubathunga and I'm a student of ANC. My question is about court proceedings. What are the court proceedings in place to provide relief and penalties for tax-related offences?
Welcome back to Law, Land and Liberty. We are in conversation with Attorney-At-Law Naomal Goonewardena. This is our last segment and we want to talk a bit about the court proceedings, the appeal process and what the general individual can do. Now it's a very, very vast area, but we'll try and touch on the key things. Now, as we ended our discussion on the previous segments, just to clarify, I think very briefly you can answer this question. There is no specific relief rather than the consumer being educated about what the taxation policy is and how that will affect someone who develops, specifically when it comes to condominiums. Is that the case, or is there some authority that we can go to?
No, there is no relief because I don't think the condominium management authority is empowered to deal with pricing.
Right. So that will be very specific to those situations. Now, we'll start with the appeal process for taxation. Now, what does the general characteristics of a court case related to tax look like now? That wouldn't be too clear to most people.
Yes.
How does it come
first
to court?
of all, it is you would file your income tax return,
right,
and then within a specified time, before a specified date, the Indian Revenue, if it does not accept your return, is supposed to issue an assessment on you. So within when you get that assessment, then thereafter, if you don't agree with the amount which is assessed, you are entitled to appeal.
So they wouldn't accept your what you submit because the Inland Revenue would believe that you make more money or something like that.
That's correct. So Inland Revenue is not accepting it, very especially either on the basis that your income is understated,
right,
or that certain expenses they are not permitting that to be deducted.
Okay.
So by and large, those would be the grounds on which the assessment is issued.
Right.
So when that assessment is issued, you are supposed to appeal, and then there is an administrative process of hearing the appeal.
Okay.
So the appeal is heard by another office of the Inland Revenue Department itself. So it's an administrative appeal.
Right.
It's not a court process. So at which point of time you would give whatever additional documents you have or whatever it is. So it's not legalistic in that sense of the word,
Okay.
because it's an administrative process as opposed to some court process.
Okay.
But at that point of time, you need to give all the documentation and all that which you have in order to support your appeal.
Okay.
Thereafter, the Commissioner General, who is hearing the appeal, would give a determination.
Okay.
And if that determination is unfavorable, you have an appeal to the Tax Appeals Commission,
Okay.
which is a commission comprised of nine persons. And
are they judges or?
Yes.
Yeah.
Some of them are retired judges,
Right.
some of them, but or others are acquainted with the field of tax. So then at the Tax Appeals Commission, there is another hearing. So that is an independent body which is hearing your case. Once again, it is not like a court as such, but it is not administrative solely either.
Right.
So at that stage, it's the second stage of appeal, and then once again the Tax Appeals Commission will make a determination.
Okay.
If you are dissatisfied with that determination, then there is an appeal to the Court of Appeal.
Okay.
And if you are dissatisfied with the Court of Appeal decision, there is an appeal to the Supreme Court.
Right.
So I think the appeal process is pretty standardized, but I think the main thing is if the administrative part of the appeal process can be better organized,
Okay.
then I think the Inland Revenue Department itself would stand to gain, and also I think the taxpayer also would stand to gain. Because eventually I think going through a court process is not something which is desirable from either party's point of view. And also it's that the Inland Revenue also, I think officers need to have the discretion to be able to make decisions.
True.
If by some chance decision making is stifled to some extent, then because of concerns about as to what the audit would come and say or something like that,
Yeah.
then what happens is eventually the whole process gets pushed up and there's a delay.
Right.
And delay generally also means loss of revenue.
Yeah. I really want to tap into the experience you have on the ground on this. Even though this is not purely a legal matter, what sort of backlog do you see when it comes to cases relevant to taxation now? We see this complaint come up mostly when it comes to land law cases. Is the functioning smoother in those instances? How does court proceedings for tax law generally function?
Yes, I think over the last 2 to 3 years, there has been a particular court in the Court of Appeal which has been hearing almost entirely tax appeals.
Right.
So because of that, a large part of the backlog has been cleared.
Okay.
And so therefore today, I think we would say that the appeal process and the settlement of those disputes has been cleared to a large extent.
Right.
So I don't think that could be the ground on which either the department or the taxpayer could have any grouse about.
Right.
But I think the process coming up to the Court of Appeal itself takes time.
Because it's a tedious and there are multiple elements there.
Multiple elements there.
So just to clarify, I know you're also part of things like the Sri Lankan Arbitration Center, and that is arbitration is also an aspect that you have been interested in, and specifically ties up well to this. All those the commissions that you were mentioning, any decision they make is also binding, as in it would be like a certain an arbitrator's decision. In those instances, the Court of Appeal will take that in that same level. Is that it?
Yes,
right.
That's right. So it is Tax Appeals Commission is a part of the statutory process.
Right, right.
So one of the things is, for example, now the initial appeal goes to the Commissioner General, and the Commissioner General gets those cases heard by another officer within the same department. Now that process is not very satisfactory, in the sense that an officer in a department may not really differ or want to differ from a view expressed by another officer in the department, right? Because that's how the public sector works in today's context. Maybe 50 years ago it would be different. Right. So that stage of the appeal doesn't work the way it could. And one of the things is, maybe at that stage itself, if there could be even external adjudicators, I think that stage of the appeal may work better, and there may be a higher settlement percentage at that level, which is the most appropriate level at which the matter should get settled.
Right, right. I think that makes sense. I think the court, since the court of first instance technically would be the Court of Appeal, you might as well have that have things like this settled before. I think we are running out of time. Maybe towards the latter part, I want to just clarify with you, sir. In terms of tax evasion, I think you mentioned this. It's mostly the Inland Revenue Department would be interested in collecting the taxation and not to act as a body that penalizes. But tax evasion, though it is not discussed too clearly in our country, tax evasion is a big problem in multiple other countries that have, one would say, far developed sort of financial systems. In relevance to that, do you believe that we have some form of stringent procedure to deal with that, to deal with specifically things like tax evasion? What sort of court proceedings would you see there? Does the Attorney General's Department get involved at one point, or how does that work?
Yeah, so actually tax evasion in Sri Lanka is quite simple and straightforward. Namely, you're not disclosing your income.
Right.
Whereas tax evasion in most developed countries is that you have set up a complex system or structures whereby actually you are evading the payment of tax.
Yeah.
So through offshore structures and all that. So I think fundamentally what tax evasion is in a developed country is different from what tax evasion is on the ground here.
Yeah.
Here it's simple, straightforward. You're not disclosing your income. You are either not a taxpayer in terms of the Inland Revenue Department records, or else large parts of your income are not being declared.
Yeah, the reason why I'm asking this question now, we also want like the entire environment in our country to be conducive to a business and all of that, but don't you think things like that could also happen in Sri Lanka, within our country, as in if there are safe havens created to the money you make, if the money doesn't come in? Are those elements that the Inland Revenue Act or preceding acts within the future should really look at? Because now if foreign earnings, I think purely the principle is justified. Foreign earnings is something that we need to really look into. But is there income there that can be taxed, that can be moved into the coffers of the state that we are not looking into?
Yes, so I think there are two aspects of it. One is this foreign earnings. Now currently, because foreign earnings are exempt from tax, really it doesn't give rise to many complex structures being set up in order to evade the payment of tax. Actually, if a complex structure is set up, it is only for the purpose of foreign exchange, for the purpose of not bringing back the money, but not necessarily for tax. But if, for example, foreign currency earnings are going to be taxed at some stage, exports, and even service income, then in such a case, I think the Inland Revenue needs to be up to it to be able to identify these sort of anti-evasion or anti-avoidance measures or whatever it is, which are being adopted by taxpayers in order to evade the payment of tax. But currently, as it stands, it's mainly local revenue, which is actually the subject matter of evasion, by and large, because foreign currency is exempt.
Right. I think that makes sense. I think I have a number of things to ask you, but the time has come against us, as usual in this program. I'd like to thank you for spending this time with us and explaining a lot of important things. I think a lot of new details that we really understood from what you explained. Attorney-At-Law Naomal Goonewardena, the President Partner and founding member of Nithya Partners, who has been in this field for over 30 years. Thank you so much, sir, for spending time with us today.
Thank you, Danitha.
All right. Paying one's taxes is an integral duty for the functioning of a country, a duty that should be understood when engaging with any daily activity. Subramanian Swamy, former Minister of Law and Justice in India, once said, "The black money issue should not be misunderstood as one of merely avoiding taxes. It is in fact a major systemic crime of denying the nation's financial system the proceeds of wealth. Such denial should actually be declared as treason, where opportunities to share the wealth for the benefit of the poor are willfully denied." That is all from us here at Law, Land and Liberty. If you had missed today's program, you can re-watch our entire episode on our YouTube channel, youtube.com/otherthanenglish. Join us again next week as we break down a contemporary legal topic. I'm Derana. Have a great night.